Ladies and gentlemen, I want you to pause for a moment and consider something most investors refuse to see. The warning signs are already here. Right now, gold and silver, the oldest and most trusted measures of value in history, are speaking to us. They are telling a story that few are listening to, a story about fragility, instability, and a system that is closer to turbulence than you might imagine. This isn't speculation. This isn't fear-mongering. It is a quiet, insistent signal, one that has been flashing long before the headlines will admit it. And if you ignore it, you may find yourself caught off guard. But if you pay attention, you can see the path to protect your wealth and perhaps even benefit from what most will call chaos. Think about it. When the metals start moving like this, when gold climbs steadily and silver accelerates beneath the surface, it's not just a number on a chart. It's a reflection of confidence or the erosion of it in our financial system. It's a barometer of trust, fear, and human behavior. And it is telling us something critical. Markets are vulnerable. Volatility is rising, and opportunity and risk are arriving together. So right now, what we are witnessing in the precious metals market is far more than a simple price movement. It is a signal, a flashing warning that few are paying attention to. Gold and silver have always been the ultimate mirrors of confidence and fear in the financial system. And when they start to behave in unusual ways, it is rarely a coincidence. Look at the patterns emerging. Gold creeping toward historical highs with deliberate, steady momentum, while silver, often overlooked, is quietly accelerating, its movement sharper, its pressure building beneath the surface. This is not normal market behavior. When these assets rise together in this synchronized yet subtle manner, it tells us something very important. Confidence in the conventional financial system is eroding. Fiat currencies, government promises, and even the usual safety nets investors rely on are beginning to fracture under the weight of hidden pressures. Most investors, however, are blind to this. They are watching the stock indices, the job reports, the headlines, believing that these indicators tell the full story, but they do not. These surface-level numbers can be manipulated, massaged, or simply delayed in reflecting what is actually happening underneath. Gold and silver do not lie. They move according to trust, fear, and real value. When they start rising aggressively, it is the market sending a message. Something fundamental is shifting, and those who fail to pay attention are walking straight into risk without even knowing it. It is like ignoring the smell of smoke when a fire has already started to spread. By the time it becomes obvious, it is often too late to respond. This is not a call to panic. It is a call to awareness. The precious metals are acting as sentinels, warning us of instability before it becomes visible in the mainstream. History shows us that these warnings are rarely subtle. When the metals move this way, markets have a way of correcting violently and often without warning to those who rely solely on conventional indicators. The underlying forces at play are complex. Inflation pressures that erode real value, central banks that continue to manipulate interest rates and liquidity, and global financial systems that have grown ever more interdependent and fragile. Yet gold and silver cut through all of that noise. They react to real confidence, real demand, and real fear. Understanding this behavior is crucial because it gives insight into what lies ahead. Those who are attentive, who read these signals correctly, gain the advantage not just in avoiding losses, but in positioning themselves to preserve and even grow wealth when volatility strikes. The metals are not just assets, they are early warning systems. They tell a story about human behavior, trust, and value in a world increasingly divorced from sound financial principles. Ignoring them is not ignorance, it is risk, Paying attention, studying the patterns, and responding thoughtfully is strategy. Right now, gold and silver are speaking, and their message is urgent. They are telling us that stability is fragile, that confidence can erode faster than expected, and that the markets in their current form may be closer to turbulence than anyone wants to admit. The warning is real. The opportunity for those who understand it is equally real. Central banks are playing a dangerous game, and most people don't even realize it. On the surface, they speak of stability, of growth, of normalizing interest rates, yet beneath the polished statements lies a world of hidden imbalances, of leverage, of liquidity that has been injected into the system in amounts that are unprecedented. Inflation is no longer just a number on a monthly report. It is a quiet, relentless force eroding wealth, savings, and trust in the system. Every day, as prices rise and currency values decline, the purchasing power of the average person diminishes, often without immediate recognition. And while central banks continue to claim control, gold and silver are telling the opposite story. When precious metals begin to move as they are now, they reflect a market sensing that central banks may be losing their grip. Gold rising steadily is not just about speculation. It is a reflection of fear, of caution, and of a search for real value. Silver moving even more aggressively amplifies this message. Together, these metals are signaling that trust in paper money and conventional financial instruments is beginning to waver. It is subtle yet unmistakable to anyone who knows how to read the signs. Investors who ignore this message are relying on the narrative of central authority rather than the reality of market signals. They are hoping that the numbers will magically align with their expectations, even as the foundation beneath them becomes more fragile by the day. What most people fail to understand is that these movements are psychological as much as they are financial. The rise in gold and silver represents the collective doubt of informed investors, the anticipation of instability that has not yet fully manifested in the mainstream. When fear builds in this way, it spreads quietly, like an undercurrent that eventually breaks the surface. By the time headlines reflect the crisis, it is too late for those who did not pay attention. Gold and silver move first because they are the instruments people turn to when confidence falters. They are not reactive. They are predictive, a real-time measure of trust and sentiment in a system that is increasingly overstretched. Ignoring this is not simply risky, it is financially dangerous. History shows us that markets rarely wait for permission to adjust. Corrections, crashes, and shifts in capital flows happen suddenly, and the precursors are always subtle signals, the kind that gold and silver are currently providing. Understanding these signals allows an investor to anticipate, to protect, and to position strategically rather than react emotionally. This is not about fear-mongering. It is about seeing the truth beneath the polished statements, the press releases, and the financial forecasts that everyone else is following blindly. The message is clear. Central banks can manipulate numbers, they can provide liquidity, they can talk about stability, but they cannot fully control confidence. Gold and silver do not respond to spin, they respond to reality. And right now, that reality is warning us that inflationary pressures, financial imbalances, and eroding trust are converging. Those who recognize the signal, who understand its implications, have the opportunity to safeguard their wealth and act strategically before the broader market is forced to confront the truth. The metals are speaking and the message is urgent. The system is more fragile than it appears, and those who ignore these warning signs do so at their own peril. The human element in markets is often underestimated, yet it is the single most volatile and unpredictable force. Numbers, charts, and economic reports may capture trends, but they cannot capture fear, hesitation, or panic. Gold and silver do, because they are not just instruments, they are reflections of collective human behavior. Right now, what we are seeing in these metals is a subtle but unmistakable signal that fear is quietly spreading among the informed. It's not dramatic yet. It doesn't appear in the mainstream headlines. But those paying attention can see it. Silver moving faster than expected, gold creeping toward historic levels, premiums rising, and investor behavior shifting in ways that reveal underlying anxiety. This is psychology in motion. Investors tend to herd. They follow narratives rather than data. They react to fear after it has already taken hold. And they often wait too long to acknowledge that something is fundamentally wrong. History has shown us time and time again that market crashes are not caused by a single event. They are caused by behavior, by hesitation, by the domino effect of individuals acting on emotion rather than reason. Gold and silver are the early indicators of that behavior. They react before the masses do, reflecting collective sentiment in real time. They are telling us that the calm many are clinging to is fragile, that the undercurrent of doubt is growing stronger, and that inaction now will result in reaction when the storm hits. The challenge for most investors is that they confuse stability with certainty. Just because markets appear calm, just because the economy seems to be holding, does not mean that confidence is intact. In fact, the movement of precious metals suggests the opposite. There is a quiet but growing distrust in conventional assets, a fear that central authority and the financial system may not deliver as promised. This distrust doesn't show up in the daily news cycle, but it shows up in market behavior, buying patterns, spreads, and subtle surges in safe haven assets. Ignoring these signals is equivalent to ignoring the instinctual warning signs that any experienced observer would recognize: the tightening of the atmosphere before a storm, the tension in the air before an earthquake. Understanding this behavior is essential. Gold and silver are not just reacting to economic events, they are reacting to human psychology, to confidence and fear, to trust and doubt. They give us insight into what is happening beneath the surface of the markets, the kind of insight that cannot be gleaned from charts alone. Those who see this, who comprehend the signals, have the advantage. They can act strategically rather than emotionally. They can protect wealth, preserve opportunity, and even position themselves to benefit when the masses finally react. The metals are not a prediction, they are a reflection. They are a real-time measure of sentiment, confidence, and fear. And right now, that reflection is telling us something profound. The market may appear stable, but human psychology is shifting beneath it. Hesitation, doubt, and fear are growing quietly, and they will eventually manifest in action. Those who recognize this early, who understand the behavior driving these movements, will be ready. Those who ignore it will be forced to respond after the wave has already broken. Timing is everything in markets, yet most investors mistake prediction for preparation. Nobody can tell you the exact day, hour, or minute when a market crash will occur, but the signals are always there if you know where to look. Right now, gold and silver are sending those signals, subtle, consistent, and undeniable. The acceleration in their prices, the unusual spreads, the premiums rising quietly behind the scenes, these are not random events. They are indicators that the system is bracing for stress, that volatility is building, and that the conventional markets are more fragile than most want to admit. Understanding this difference between timing and prediction is essential. Timing is about awareness, prediction is about guessing. Gold and silver give us timing cues. They tell us when the system is primed for movement, even if we cannot pinpoint the exact moment. Most investors ignore this distinction. They wait for headlines, for dramatic crashes, for the moment when the entire market is in panic mode before they act. By then, the opportunity to act strategically is gone. Gold and silver do not wait for headlines. They move according to trust, fear, and real value. When they rise steadily and in concert, it reflects a collective anticipation of instability. The metals are not reacting to fear, they are the manifestation of it. They show us the psychological state of investors who are awake to risk, while the majority sleep, believing in the illusion of stability. This is why paying attention now is not optional. It is survival. Preparation, however, is more than just watching numbers. It is about understanding the forces at play beneath the surface. Inflation pressures quietly eroding wealth, global imbalances that are not widely reported, central banks struggling to maintain credibility, and human behavior that rarely reacts rationally under stress. When these forces converge, the resulting volatility is often sudden, harsh, and widespread. The metals are signaling this convergence. They are telling us that the system is stretched to its limits and that those who fail to interpret the signals will be forced to react under pressure rather than act proactively. This is the difference between surviving a market event and suffering from it.
It is also essential to recognize that these signals are not a reason to panic. They are an opportunity to position oneself strategically. Awareness allows you to assess risk, protect capital, and even identify ways to benefit from the chaos that will inevitably follow. Gold and silver are early indicators of market sentiment. They are not just measures of value, they are measures of confidence, trust, and human psychology. Those who see and act on these measures have a clear advantage. Those who ignore them are relying on hope and convention, neither of which protects wealth in times of instability.
The message is simple: markets do not collapse without warning, and those warnings are visible in gold and silver. Understanding timing versus prediction, preparation versus panic, and psychology versus numbers is the key to survival. Right now, these metals are telling us that the system is primed for turbulence. They are giving us a chance to act strategically, to protect what we have, and to position for advantage while others remain blind to the signals. Those who understand this are already ahead. Those who do not will face the consequences when the storm finally breaks. Every warning carries with it a hidden opportunity, and this is especially true when it comes to gold and silver. Right now, the metals are signaling risk, instability, and growing uncertainty in the financial system, but they are also signaling opportunity for those who understand what they are seeing. The truth is that market crises are not only destructive, they are transformative. They reveal weaknesses, shift confidence, and open doors that were previously invisible. Gold and silver are showing us where those doors are and how to approach them strategically. Those who interpret these signals correctly can not only protect their wealth, but position themselves to benefit when the broader market finally reacts. The first step is understanding that volatility is not the enemy. It is the signal. When gold and silver rise aggressively, it reflects fear and anticipation among informed investors, and fear is contagious. But within that fear lies clarity. The metals show us which assets are at risk, which portions of the financial system are overextended, and where the opportunities lie to hedge, preserve, or even grow capital. The masses tend to panic after a crash begins, reacting emotionally and often locking in losses. Those who read the signals ahead of time act strategically, positioning themselves for protection and advantage. This is the fundamental lesson of every historical market disruption. Opportunity exists for those who understand the signs before the mainstream does. We also need to recognize that opportunity is tied directly to awareness and action. Many investors see gold and silver rising and dismiss it as market noise or speculation. They fail to see that these movements reflect real changes in confidence, risk perception, and asset allocation on a global scale. Ignoring the signals now is equivalent to walking into a storm blindfolded. Acting on them strategically is equivalent to adjusting your sails before the wind hits. Timing, positioning, and understanding market psychology are what separate those who survive from those who suffer. The metals are telling us not just to protect what we have, but to anticipate how the broader market will respond when the panic spreads. This moment is a reminder that crises and opportunity are inseparable. The system is fragile, stretched thin, and increasingly prone to shocks. Gold and silver, as the ultimate indicators of trust and fear, are signaling that these shocks are likely closer than most expect. Yet within that risk is the chance to prepare, to act deliberately, and to gain advantage where others see only chaos. Those who understand this do not simply hope for the best. They recognize patterns, interpret signals, and position themselves with clarity and strategy. They see beyond fear to opportunity, and they move with precision while the rest react emotionally. The message is clear. The metals are not just warning of danger. They are showing the path to protection and advantage. They remind us that financial crises are both inevitable and manageable if approached with knowledge, awareness, and strategy. Those who heed these signals now are not only preserving their wealth, they are positioning to thrive when others are caught unprepared. Gold and silver are the ultimate teachers in this moment, revealing both risk and reward, fear and opportunity. The question is not whether the storm will come, it is whether you are ready to respond strategically when it does. Those who understand the message, act decisively, and see the opportunity will emerge stronger on the other side, while those who ignore it will be left behind, unprepared and exposed.